All right, good evening, everybody. I hope you're all doing well. Tonight, we're going to be covering Chapter 5, the last class for this week. We're going to be talking about sources of funds, institutional, non-institutional, and other lenders. We are going to spend a short period of time going through this, and then y'all have a video that y'all are going to watch that I want you to go through, similar to last night, but very good information, okay? So, we're going to go ahead and start off with institutional lenders, okay? What we're talking about in regards to institutional lenders are these are the people that you go to borrow money, okay? So, of course, your commercial banks, any mutual savings banks, savings associations and thrifts, life insurance companies, pension funds, and credit unions are all going to be those areas that you need to be aware of, okay? Each and every one of these are where you borrow money from, okay? So you're not going to end up going, and this comes back to that part where we talked about secondary market yesterday. This is the primary market. This is what this is. This is your primary market. So in this situation, if you need to borrow money, Mr. Eugene, do you call up President Biden and say, hey, Mr. Biden, I need to borrow some money? Is that how this works?
Not hardly.
No. You go to the bank, okay? You don't call up the government and ask the government or tell the government, hey, I need to borrow some money. I want to buy a house. I want to borrow some money. It doesn't work like that, okay? So what ends up happening in this situation is that you have to understand there is the difference in regards to these different organizations, and that being the institutional lenders. Okay, so of course we know what commercial banks and all are. And some people will say, well, wait a minute, you can't borrow money. You can't go down to a life insurance company and borrow money. Well, you can borrow against life insurance. You can, if you have a certain life insurance, you can borrow against it to purchase a home. Okay, and sometimes if you borrow against some of your retirement, some of that is also tax deductible as well. Okay, so when we're dealing with these things, there are certain exclusions and certain exemptions and all. Now, you don't need to know all of the specifics of it, but primarily, like I said, is that you need to have an awareness that these are primarily going to be your institutional lenders, okay? These are the areas that you're going to focus on, and this is the information that you need to be aware of, because each one of these plays a huge role in the overall operations of the real estate market, okay? Now, again, each one of these has different policies. They each have different rules, okay? Now, Mr. Aiden, do you think that you as a real estate agent need to know what credit score a person needs or percentage down or any of that stuff? Do you yourself need to know all that information, sir? Why do you say no? Are you the one that's approving them for the loan?
No, yeah, I'm not giving them money.
You ain't giving them money, okay? You're the one that's selling them a house. Now, it would be beneficial if you knew about what the average is, but you don't need to know the specifics, if that makes sense. You don't need to know that, okay, Mr. Eugene, because of your income, you only need, instead of a 720, you need a 680, and but if you're married, you know, you could go down to possibly a 650. You don't need to know all that stuff, okay? That's why you partner up with the lender. You partner with the lender, what ends up happening? You let the lender do that stuff, and you do your job. Like I tell people, we're not in the business to know everything. We're here to know a little bit about a lot of things. Okay, that's our job. Your everything market that you need to know is how to sell and how to know what the properties are, okay, what they look like, and styles and all of that type of stuff. So again, extremely important that you leave the lending part to the professionals, okay? If a client calls, Mr. Grossman yesterday had a very good one. Client called, found a house he wanted, ended up, instead of Mr. Grossman, your client asked you, can I get approved for, was it 319 or something, or 320 or 321? 321. Can I get approved for 321? Mr. Eugene, is that Stefan's job to tell his client that?
Nope.
No, that's not Stefan's job. Stefan's job is to what? Call the lender. Hey, Jay, question for you, sir. My client wants to get pre-approved for 321. Can you make it happen? He asked you what? A few questions. What did you get, Stefan?
Approved.
We got approved. And guess what? Did you have to do any of the math?
No, I didn't.
Did you have to do anything?
No, that's why I thank Jay. It's like, thank you, you're a wizard.
Yeah, that's right. You're the expert. You go deal with it. I just sit here and make things happen. Okay? So in that situation, it's not your duty as a salesperson to know everything that deals with banking. Okay? If Miss Linda worked at a bank and she knew everything's inside, outside, upside down and around, that's one thing. But if you are a salesperson, your job is to sell. A lot of real estate agents, they lose that. They try to start giving advice. They start trying to give information. They try to start spilling all this. That's not your job. It's good to find a good lender. One thing I'll tell you is I like to work with lenders where I can just pick up the phone and they answer. Okay? One of my biggest pet peeves is when you're dealing with these institutional lenders that are up here, you work with a bad mortgage broker. I've had this happen many times. Us as salespeople always complain about it. We call the person, they never answer. Call the person, they don't answer. I need to find out where the appraisal's at. When are we what are we at in regards to underwriting? Have you got the employment verification? Where's all this stuff at? Have you done all these things? Okay. See, what happens is a lot of times if it is a small loan, mortgage brokers, just like some realtors, unfortunately, push it to the side. Okay. If Aiden over here got a $1 million client, Mr. Grossman, he's representing Mr. Grossman on a $1 million transaction, and Mr. Eugene here comes in and he wants to buy a $50,000 acre or a $50,000 lot. What are you going to do, Mr. Aiden, if you're a seasoned person?
Probably going to devote a lot of time to Stefan.
Why are you going to focus on Mr. Grossman, not Mr. Eugene?
Big commission.
Yeah, he makes more money. He makes more money. If he's making more money, Mr. Eugene ain't important to him. Okay? But here's the problem. Okay? Here's the problem. Is I've had this happen before. Where my focus was on a higher end client, I didn't ignore, but I had to go over here and I was focusing a little bit on this person, and come to find out the higher end client, their whole transaction fell through. My client didn't get rid of me. I was just not as I guess what's the word? I wasn't so much focused on them or dedicated to them. So in that situation, since I wasn't dedicated to that client, yes, he still used me and we went through it. What ended up happening was that individual did not use me on the other's purchase of their house. Because of the fact is, my focus was on one. That's where I had to at that point figure out that Justin can only do so much. And you will find that in this industry. You will find that on average, most people will tell you the maximum properties or transactions you normally can have going at one time is approximately 5. Okay? Mr. Stefan, would you agree with that, sir?
I would.
Why would you agree with that?
Because I have 4, almost 5, and it's a lot.
It's a lot, isn't it? Because you're juggling 5 different people, and this may be their largest transaction they ever have done, and you're juggling them. Okay? And the problem with that is you have to end up prepare them and focus and give them your attention. No matter if it's like I tell people this all the time. If Mr. Grossman has 5 transactions, or let's just put it this way. Say Mr. Grossman has 6 transactions. Okay? They are, of the 6, there's 250, 250, 250, 250, 250, 50. Okay? What do you think I'm going to tell Mr. Grossman to do? Work on these 5, and what should you do with this 150,000, Stefan?
Delegate it to someone else.
Refer it out and take a referral fee. Now let me ask you this question. What if we put the same facts where there's still 5 250s and there's 1 million? Now what do you do, Mr. Grossman?
You hire an assistant.
Nope. Still puts too much on you. 5 is normally the max. So what should you do?
Get rid of one of the 250 ones.
Get rid of one of the 250, take a referral, because if you give 250 to Mr. Aiden, for example, if you don't have to do nothing with it and you get 25%, that's a steal, because the standard in commissions on referrals is what, Miss Linda?
I'm sorry.
25%.
Yes, I'm sorry.
Okay? So in that situation is, understand that sometimes it's just best to just say, hey, you know, and let's even say this, guys, and I promise you this. You really hustle really hard, this does happen. What happens if Mr. Grossman now has $5 million and won $10 million?
One of the millions gonna go away.
Well, when you're done with all that, you won't have to work for years.
All right? But here's the thing. My question is, what do you do if, like I told you, 5 is normally the max? Do you get rid of all 5 and keep the 10?
No.
No.
So what do you do?
Get rid of 1, maybe 2 of the $1 million.
1 or 2 of the millions,
Refer 'em.
and end up keep maybe 3 of the millions and 10, and end up still make money off of the 2 that were millions for Mr. Aiden in that situation.
And you still won't have to work for 2
And you
years.
still won't have to work.
And everybody
Okay.
forget about Miss
I mean,
Linda.
that's a lot of money.
Yes. Guys and gals, I've always told people this. I've done $1 million transactions. I've done multi-million-dollar transactions. I've done those things, okay? But I'm telling you in this situation is, guys and gals, some of the people I work with in $1 million transactions, I'm going to tell you this. You better be ready to designate majority of your time to that person.
Day, night.
Day, night, in the middle of the night, you just, and if they need you, you drop it and going. I've always said this, if I ever get a skyscraper, I'm retiring. If I get to sell a skyscraper, I'm done. That's over $100 million. I'm out, okay? I'm gone. But in the situation is, guys and gals, as I've learned myself, I don't personally, just because of everything that I do, I run a business and I only, on average, take 1, maybe 2 transactions at a time. And other people want to use me, I say, I'm sorry, 1 or 2 is all it can. Because of the fact of the matter is, you got to know your limit. I would rather have 5 happy customers that refer me out than take 20 clients and give them, you know, very shoddy work and have a bad name around town. Okay? Very key in that situation. Okay? Now, with that being said, now how exactly do you implement professionalism? Well, to do that, that's by having these types of organizations in your pocket. One of the things that I'm having Miss Linda work on with my agents right now, and those of you that are sitting in here, y'all will be having in the next week where you're going to be mandated. My agents are mandated to go out and meet different lenders at different places. It's no option. Because of the fact of the matter is, number 1, Aiden, do you like free food?
Yep.
Do you like free coffee?
I do.
Okay. Well, you can get all that, and all you got to do is sit down for about an hour and listen to a presentation. But that 1-hour presentation may turn into a connection like I have with my lenders, where I can move mountains on certain transactions. My clients send me messages all the time. Holy heck, how did you do that? How in the world did you make that happen? We couldn't have done it on our own. It's because I have those connections. Okay? Yes, Ms.
Can
Linda?
I ask you a question? When you go and speak to a lender,
Yes, ma'am.
what type of questions do you ask them?
You don't
when
have to ask questions.
When you don't have,
The goal of the matter is this. When you speak with the lender, the goal is this. It is not about you. It's about them. You want them to tell you what products they offer. See, a lot of people think that this up here on the screen, they think, oh, well, everything's the same. A mortgage is a mortgage. No, y'all gonna see it here in a little bit. In the video you're gonna watch, you're gonna see there are different types. And the types in the video, there's only 3. But of those 3, there's multitudes underneath them. Okay? So for example, Mr. Aiden, he's a real estate agent. Mr. Aiden, are you do I pay you a salary or a hourly wage when you're here, sir?
No.
No, you're a what?
Commission guy.
You're a commission, you're independent contractor. Okay? So you get paid by what? How much you work. How much you get out there and hustle, how much you end up making a living. Okay? No matter what company you go to, that's how it works. That's how this industry is. So you end up, Aiden is a commission guy, so he could end up, he can make nothing, or he can make hundreds of thousands of dollars. It's up to Aiden. Okay? Now the question here in this situation is if Mr. Aiden, say he is a person that sells $300,000 a year in real estate. And that's in his bank account. He goes down to the bank of Mr. Eugene, and Mr. Eugene, he walks in and he says, Mr. Eugene, I'd like to get a loan from you. Mr. Eugene says, sure, certainly, fill out this application. So, and he says, also, please give me a copy of your W-2. Mr. Eugene, does Aiden get a W-2 if he's an independent contractor?
Oh.
What's he get? Do you know what it's called? 1099. Get the 1099. Aiden says, well, Mr. Eugene, I don't have a W-2. I have a 1099. I'm an independent contractor. Mr. Eugene's going to say, no, we can't approve you for a traditional mortgage. You don't have the proof of showing that you're making income, and normally you have to have 2 years. 2 years of 1099 filing of returns showing profits over normally about $40,000. 2 years. Now, if you're an independent contractor, do you want to show that kind of money?
No,
No, because then what happens to you?
taxes.
You got to pay high taxes. So Mr. Aiden ends up, he don't want to pay the government nothing, so what's he do? He's writing it off, writing everything off, right and left. Bought a new car, bought this, bought that, bought.
Paper, ink.
So yeah, paper, ink,
tape.
cell phone, everything, rent. He writes it all off. So he shows $0 that he made. Well, Mr. Eugene, if he comes into you and he shows you his tax returns for 2 years of $0, are you going to give him a loan?
Nope.
No. Why would you give somebody a loan? But he's going to come in and say, but wait a minute, Mr. Eugene, here's my bank statement and I have $600,000 in it. And I just want to borrow $200 from you. Okay? And what happens in that situation is, guess what? Mr. Eugene's still going to say, I'm sorry, Aiden, I can't approve you. I don't care if you have $600,000 and you want $200 from me. Sorry. There's nothing I can do. Okay? Now, Aiden, is that saying fair to you?
No, not really.
Not at all. So in this situation, Stephen could be working, say, at McDonald's, making minimum wage, and he could come over here and he could apply, and Mr. Eugene gives him a $400,000 loan. How do you like that?
Disrespectful.
Yeah.
I mean,
Yeah.
I agree with you.
So in that situation here is, yes, it does. It happens like that. It's one of the benefits of being a person that has a W-2. Is that you're showing income, you're guaranteed this money, so Mr. Eugene's going to go over there and he's going to be more willing because Stephen has a job. Even if it is McDonald's, he has a job. Yours depends on how much you want to work, okay? So what happens is, getting back to Miss Linda's statement, Miss Linda was saying, well, Justin, what happens though about the situation is, what was the key question? I'm trying to rethink what you said, Ms. Douglas.
What do you ask when you go to?
Yeah,
see-
so the key thing that comes back to that, I'm glad you brought that up. The reason that happens is this, is if that happened, a lender, when you sit down with them and you talk to them, what they would have told Aiden, if Aiden's sitting here and he went through that dilemma, they would have told Aiden, well, Aiden, has Miss Linda, your office manager, has she ever told you about a bank statement loan? Well, what the hell is that? What's a bank statement loan? Well, a bank statement loan is this. Certain mortgage companies, you provide them sometimes a year, 2 years of your bank statement history. They add up the entire amount that you had in your bank statement. They divide it by 12, and that determines what your monthly income is. So if you end up, you have 300 and 300 for a total of 600 in your account, well, they're going to show that you may be making, say, $20,000, $30,000 a month. So you would not apply or be approved for a normal loan, but you could go into a bank statement loan. So when we're talking about these things, there are different types of loans that are out there. There are different types of ways of doing things. Another thing that people don't think about is the USDA loan. They don't know what a USDA loan is. Well, a USDA loan is the government gives certain rural areas you can move in and only pay $500. Sometimes an area is so classified that they only have to pay $0 to move into their house.
And that's like where cows and.
No, not always.
Not always?
Welburn, Right outside of here, not too far out, about 15, 20 minutes out, parts of it is USDA category.
So how do you find
So-
that out?
You talk to the lender. The lenders give you that information. So could you imagine, Mr. Aiden, you're out there trying to or talk to Mr. Jacob, for example, and he's wanting to buy some property that he can live in with him and his wife, and he wants to go in, but he's only got $500. Well, if you knew about USDA loans and you knew the areas, guess what could happen? You may just want a client. But if you didn't know nothing about this, what happens? You lost a client. Okay? So it's imperative that you know these different types of lenders. You talk to these different people. You're educated in this. We actually had a very good meeting today, me and a couple of other brokers around town, and we had a very good meeting. One of the key things we talked about was the fact of the matter, you know, we talked to brokers that were in Huntsville, Austin, all over. Had a good old meeting today. Spent almost 8 hours in it. But we learned a lot. We learned a lot in regards to the situation that most agents, while they're offering free education courses, ends up in the situation is they don't take the information where it's at. Okay? So in that situation is, like I said, is that most individuals, most agents do not literally, it's kind of what I call the college attitude. Most agents, when you tell them they got to take a training, what happens to them most of the time? What happens when you're listening to your classes at your college and your teacher's up there lecturing?
Zone out.
You zone out. That's what happens. And it's not just Aiden, it's even older people. They zone out. Yeah, they zone out. But the thing is guess what? If you zone out, and I'm talking about bank statement loans, and you're zoned out, what happens? You miss out on it, you may lost out on a client. Guys and gals, when I'm in meetings, I want to fall asleep. I just want to crash. That's what happens. But I tell you one thing that I don't do is I force myself to stay awake, because most of the time I learn a lot of information, but I got to force myself to stay awake. Okay? That is imperative to your success, is you have to know the material. Okay? Now, in regards to non-institutional lenders. Now, these are going to basically, as you see back here, these are commercial banks. These are your everyday stuff. These are your non-institutional lenders. The difference you'll see, though, is there's a difference between mortgage brokers and bankers. Right? Mortgage bankers they work for these people. So they're a mortgage banker, they work for one bank. So if Mr. Keith is a mortgage banker for Chase, he only can tell you the products that Chase provides. But I am a mortgage broker, a licensed mortgage broker. When I used to have my license active and I was doing things, I could tell you about almost probably 100 products, 100 different banks and their products. Okay, knew a lot about it. So there's a difference between who you're meeting with. Now, am I telling you, Aiden, well, don't scratch this and go only to mortgage brokers? No, because there's sometimes that there are certain programs, like, for example, Prosperity Bank. They have some great mortgage opportunities for nurses. Didn't know it, so I went and talked to them. But again, you want to be able to talk to both. Okay, you want to be aware of it. Now, what happens if Mr. Aiden walks into Prosperity Bank and the person he walks up to is Miss Linda, and he walks in and says, yes, I'm a real estate agent, and I just wanted to kind of talk to you about y'all. Well, get the hell out of here. I ain't got no damn time for you. Well, should you give up? Should you be like, well, I'm never going back to Prosperity again? No, you go find somebody else. You go to another branch. You want to get connections. If Miss Linda doesn't want to talk to you, bye. I'll find somebody else. I'll find Mr. Eugene. And he may be the type of person, I remember when I walked into Prosperity, this guy was the vice president of the bank. He came out and he was like, here's all this information, here's everything, here's my card, here's my cell phone, here's everything. You call me for anything you want. I'll get your people set up. That's the type of people you want to be with. Okay? Real estate investment trust. Certain real estate investment trusts, they do provide in some situations, they give money out. Real estate mortgage trusts and hybrids are also other types. Sometimes real estate bonds, you also could have sellers. Sometimes the seller themselves may say, I don't need the money, just pay me out, okay? Or your family, your own family, they may have some cash. I've dealt with that before. I've sold houses where the families, the sister had money, the other sister didn't. So the sister bought the other sister a house and she's just paying her sister back. Sister didn't need the money, okay? Private loan companies. Now, I don't recommend too many private loans because this sometimes can go into loan shark type territory, okay? And some foreign lenders. Some people overseas will lend to you, okay? But again, a lot of times is people always get this misconception. Well, I can't get a loan, or my only option to get a loan is my bank, and I went down there and they told me they ain't giving me no loan, okay? That's not how this works, okay? So in these situations this is the norm, and most of it, it's that top one, commercial banks. But again, these are some other options. When a client comes to you and they want to buy a house, the biggest mistake real estate agents do is this. Client walks in the door. Hi, Mr. Grossman. My name's Justin Nobles, and I want to purchase a house, sir. And Mr. Grossman says, well, are you pre-approved? And Mr. Grossman goes, and asks me, are you pre-approved? And I say, well, no, I have bad credit. I have terrible credit.
That's okay, we can help you with that.
Well, that's the right thing. But what does most agents say if I walk in and I tell you, hey, Mr. Grossman, I have bad credit. I want to buy a house. What do they say?
I'm sorry, I can't help you this moment.
I'm sorry, I can't help you. I ain't got time. Yeah, there's the door. I ain't wasting my time with you. Bye. Okay? But if you're a new agent, any client's better than no client. Any client's better than no client. The key thing that you got to do is you show them that you're willing to help. Because here's the thing about life. That person knows what? That person knows what?
Other people that can help.
That's right. If I walk up to Mr. Grossman and I say, hi, I'm looking for a house. I got bad credit. Mr. Grossman says, get out of here. I ain't got time for you. I go to Mr. Aiden. Mr. Aiden says, well, yeah, let's see what we can do. Let me talk to my broker. Let's do this or let's do that. Let me try to help you, blah, 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 blah. Well, guess what? He's showing interest. Now, when I go over to my boss over here, Mr. Eugene, and I'm sitting here and I'm like, guess what, Mr. Eugene? I might actually be able to buy that house I've been trying to get, Mr. Eugene. I got this agent. He said he might help me, Mr. Eugene.
I'm gonna cut your pay.
Well, guess what they're going to say? Guess what? He's going to say, well, who's this agent? Who's this person? Well, his name's Aiden Riley.
I might want to give me a house.
Maybe I'm looking to buy a house. Can you give me his name and number? There you go.
Right here.
Uh-huh. So in that situation the key thing in this business is you're a salesperson. That's one thing I'll tell y'all guys. One thing I'll tell you. Mr. Darren, he's listening to me right now. But I guarantee you in this situation, Mr. Darren, that guy can sell ice to an Eskimo. I'm not kidding you.
Joke.
He can sell ice to an Eskimo. That's how good he is. That's the mentality that you have. His wife, just the same. She can sell, no problem. That is the type of personality you have to have. When a client comes in and says they want something, you don't think the word no. You think, how can I fix it? And to do that, you need these people. You may not be able to use these people, but guess what? There's plenty of other options. See, this is what makes a successful person versus a failed agent. This is what differentiates them. A successful realtor that's been in the business this long, I've been in it over a decade. What's made me successful is that I don't think inside the box. If you think inside the box, you're never going to be successful. If a client comes in and says, I have bad credit, how can I fix it? That's the questions you got to ask. How can I fix it? What can I do? What alternatives do I have? Who's somebody I can call that maybe give me some options? There are people out there that will let you buy houses from them. There are things out there that are available to people. You just got to figure it out. The reason a lot of people come to me and ask me questions is because they know I'll call until I find an answer. I'll call 50 people until I find the answer. Okay? It's the fact of the matter is that's what separates you. Okay? Is you got to know these differences. Now, with that being said, like I said earlier, there was a video I want y'all to watch. Okay? I do want to put this on. He does provide some good information. Again, the same gentleman from yesterday. But again, in this situation is he's now talking about, I cut out his little introduction, so you didn't have to listen to the full introduction. But he's talking about FHA, VA, and conventional loans. Now, these are the three prime loans you're going to deal with in your day-to-day life, okay? But he's taken it from the perspective of the vocabulary, which is very key in this business, okay? So he's going to talk to y'all for a little bit. We're going to watch this video, and then we will talk just a minute, and we'll call class today, okay? So I'm going to start the video, and we'll begin.
Give me a question. What are the differences between FHA insured, VA loans, and conventional loans? Would you like me to start this party, or do you want to start?
You start.
Okay. So first off, let me ask you something really basic, okay? What's a loan? Oof.
Money borrowed.
Yeah, money borrowed, I mean.
Okay. I'm looking for a word that starts with an L and has 4 letters.
Lien.
Lien. A loan is a lien. Okay. Have you ever heard that word before?
Yeah.
Oh, yeah.
Okay. What do you know about that word?
There's voluntary liens, involuntary liens, and I guess a mortgage is a lien, and so it's a voluntary lien.
Okay, good. So it's a voluntary lien. Is it general or is it specific?
It is specific
Why?
because if you don't pay it, they can come back and take your house, and that's one specific thing that they can come take.
Good. You've clearly been studying. You're ready to go. What would be an
We
example?
have that.
Yeah, what would be an example of a general lien?
Like a judgment lien where you go to court and you haven't, you have them, as a defendant, you're required to pay some kind of restitution or something to somebody, and they say, well, we're going to take everything until you're paid up.
Okay, so you got that general lien, you got a specific lien. You said that they could take your house, right? In a specific lien, and you get a loan, correct?
Yes, sir.
That sounds horrible for the bank, right?
Right.
What do they do to prevent that? So they give you a loan, they're like, you know what? We're lending you this money and we want you to pay it back because we don't want to have to do this whole foreclosure thing. That'd be horrible. But we're a little nervous. We don't know you that well. We know you well enough. We want to lend you the money. We don't know you that well. So what's the bank going to do?
Like you put the money down.
Okay, good. There's
Or some people might have to pay like mortgage insurance, like primary mortgage insurance for people who are like maybe a risk factor.
good. So if you guys, now what kind of loan is that?
What kind of loan is what?
What you're talking about, where you have 20%, you have to put money down, and there's no, a conventional loan, good. Which, maybe I could have phrased that better, but you hit it perfectly. Where we're going with this first is conventional loan. So what are the differences between FHA insured, VA loans, and conventional loans? That little blurb leads us to what you just mentioned, a conventional loan, okay?
Okay.
These are things you should not only stand for your test, but it's also important for you when you practice real estate. You guys probably heard that thing where none of this you'll ever use. You'll never use any of this. You heard that before?
Yeah.
Oh, yeah.
Whoever says that, I hate them. Never talk to them again. They're horrible people. Okay? Because one, in no way does that motivate you to study, correct? In no way does that help you want to learn. And two, they don't know what you're talking about. If you're going to do real estate, I'm going to hire as an agent. I ask you as my agent, what's this conventional loan thing? And you go, I don't know. I only need to know for my test. I don't really need to know it now. Does that make you a really good real estate agent?
No.
No. I would like to know, you don't have to be an expert on this stuff, but you should know what it is. An FHA loan,
Right.
conventional loan, all this kind of stuff. So if people say this stuff's not relevant to your exam, please don't listen to them. Just take it as it is, because this is a great example of something that is relevant. So you got this conventional loan. What is a conventional loan?
It's like from a private institution, not necessarily government backed. Again, count the 20% down scenario, usually.
Good. So Laura, read what I got on the board here.
A conventional mortgage refers to a loan that is not insured or guaranteed by the federal government.
Good, Matthew, that's essentially what you just said, right?
Right.
Yeah, so you got that down. Okay, this means that unlike federally insured loans, conventional loans carry no guarantees from the lender if you fail to repay the loan. So what do they do to make it a little safer for them?
Is that where they require the primary mortgage insurance?
Yep. For this reason, if you make it less than 20%, so people hear this 20% down thing a lot, okay? That 20% is there for what?
I guess to start with some equity.
Okay, that's a good word. There's another word I was looking for that comes up on your exam. The word leverage.
Yeah, okay.
What do you know about that word? So I'm going to try and work in words. What I want to do is, you guys clearly have a good understanding of this. I want to try and take your understanding and really make it specific to the exam. Sound good?
Yeah.
Right?
Okay, so you heard that word leverage before?
Yeah.
Oh, yeah.
What do you know about that?
It's kind of what I don't want to say collateral, but it's like what you have to, I don't know, give you leverage. It's to kind of to use the money that you borrowed.
Yeah, you're leveraging
To
somebody else.
finance your investment.
Yeah. Yeah, you're leveraging somebody else's resources. But in doing that, you're risking their money. To do that, they'll say, we'll lend you some of the money, but you got to put 20% down. And you used a word I liked. What was that E word you used?
Equity.
Equity.
Oh, equity, yeah.
What's equity?
It's money that you have that you gained from the property, either by paying down the loan or the value of the property rising.
Right. What I like to say is that equity is the money that after you sell your house, you can go buy a cookie with. It's the stuff that's physically going to be yours when the house sells.
Okay.
Okay. All right. So what's private mortgage insurance? What do you guys know about it?
I know that you have to pay private mortgage insurance. I think it's until you get 20% down, right? You have to stop paying it at that point. But I guess it's basically to insure your loan, right?
Yes. Here, Matthew, why don't you read what I got on the board here?
Private mortgage insurance or PMI policies are designed to reimburse a mortgage lender up to a certain amount if you default on your loan and your house isn't worth enough to entirely repay the lender through a foreclosure sale. Most lenders require PMI on loans where the borrower makes a down payment of less than 20%. Premiums are usually paid monthly and typically cost around 1.5% of a mortgage loan. You can normally cancel the PMI once your equity in the house reaches 20%.
Right, which is what you were saying just now, right, Laura?
Yeah.
Yeah.
You just said it much nicer.
No, but you said, I mean, that's not fair, because I had a chance to think about this. I'm writing this on the board here for you guys before we get on the phone, whereas I'm questioning you. But you clearly have a good understanding of it. Okay.
We're trying, so.
So you guys are nailing it. I mean, I almost feel like you should teach this, not me. I'm just walking you through, and you're just reciting what you already know. Okay, and so.
Wow, you're super nice to say that.
Yeah. Yeah. I guess that. You're right. You guys really do know. You know what you're talking about. Okay, so for this reason, if you make less than 20%, when you guys practice real estate, this goes back to what I was saying about what you study for the exam is relevant for your practice. You'll hear a lot of this 20% down thing all the time. Okay, you'll hear about it a lot. And this is what they're talking about, PMI. Okay, and not only for your exam, but you're gonna have to recite this whole thing when you have your first buyer of 20% down. you're gonna tell them if you put less than 20% down, you're gonna have to pay PMI. So if you can get 20% down, that'd be great. Okay.
Okay.
Oh, yeah, okay. Yeah.
Okay.
That actually kind of all the way around there, yeah.
Yeah. All right. So conventional loans must adhere to Fannie Mae. Okay. So Freddie Mac and Fannie Mae. Well, you guys heard of them? Now we're getting a little more difficult.
Yeah.
So what are they all about?
They're people in the second, or not people, but in the second mortgage market that buy loans.
Quasi-government institutes that purchase, and Fannie Mae only purchases or can purchase FHA and VA, correct?
Yeah. I want to stop you for a second because you mentioned something really important. You said the word secondary market. What's that about?
It's
I mean, they buy the loans, say, from the bank.
and then there's investors who give them money for those loans.
If I was
Basically,
ready for this, if I was 10 years old, how would you explain that to me?
I would tell you that there is
So here's words that you could use to really make this easy, and I want you guys to narrow down your knowledge. You got a lot of knowledge. So when we get off our call, I want you to really practice, take your information and narrow it down to 1 or 2 words. For example, secondary market, resale marketplace.
right?
Okay, and this is the way I explain it. You guys have it nailed down pretty well. I would say I have $10, right? I make you a loan, okay? Laura, make you a loan for $5. Matt's gonna make you a loan for $5. Sounds great, right? What's the problem? I don't have any money to lend anybody else. I'm out.
Yeah, right.
So Fannie Mae will now buy that loan, secondary market, go buy that loan, and then I'll have money to lend to somebody else.
okay.
Yeah.
It's that simple. I really want you guys to try and simplify as much as possible, because now you kind of nail it down, but as you know, when you take your exam, you get a little nervous.
Yeah.
And you want it
Yeah.
as simple as possible. Do you guys know the history of the secondary market?
Somewhat, actually, maybe getting some of it down yesterday, listening to one of your other webinars.
Yeah, actually, I did a video about it. Do you want to go, or I'll give you a quick history, or do you want to try?
After the Great Depression and banks collapsed, this, that, and the other, that Fannie Mae was created to basically kind of pump the banks back up, and that's where they kind of started loaning kind of on low interest rate loans as well, being able to put down a small amount of money, or homeowners could be able to put down a small amount of money. It was all federally banked at that point, so the banks taking all the risk there.
Yeah. Man, you guys can study. You guys can do great. Yeah, so secondary market, 1934. What was happening in 1934?
Great Depression.
Right, the 20s was the roaring 20s, Babe Ruth's hit and run, swing dancing, all that kind of stuff. Everything goes up, must come down. Okay?
Right.
So 1934, Great Depression, the only people who could buy homes, people who were really rich because you need these massive down payments. And they had these like 7 years, pay things back in 7 years, so you need a lot of money to put down, you need to pay back some crazy interest rates. So it became a country of renters, the poor got poorer and the rich got richer. And eventually the government said, we can't continue like this. So they said, hey, you gotta lend people money. And the banks were like, we're not lending money, we'll never get it back. And then up came the FHA. The FHA was there to say, hey, if we back you up here, if these people qualify, we'll make sure you don't lose any money. And then they started lending money, but they ran out of money, and then the secondary market came to purchase those loans. And without getting more detail, I have a full video on it, which you referenced. Just Google secondary market prep agent, you'll see it. But it sounds like you guys got it nailed down pretty well. Yeah, Fannie Mae and Freddie Mac are there to buy those loans in the secondary market.
Okay.
Okay? But first we're talking about the conventional loan. The conventional loan is that mortgage loan you get your average home buyer. Who doesn't get it back, which leads us to FHA. What is the main purpose of the FHA? And this is big. People get this wrong all the time.
I want to say that it would be insured. That would be like the, I guess, the benefit of it, but I don't.
So can I go? Yeah.
Go ahead.
Can I go get an FHA loan?
Yes.
Does that mean that FHA is making me a loan?
No. You won't actually go directly to the FHA. I mean, it's just a.
It's insured by the FHA, but it's a private lender.
Excellent. Good. Perfect. People make that mistake all the time because in everyday vernacular, people say FHA loan, where it's actually an FHA insured loan.
Okay.
Right.
But in everyday speech, people say FHA loan, and then what happens, people take their test and say, oh, I'm getting an FHA loan. You're not getting an FHA loan. You're getting a loan insured by the FHA.
Right.
Right? And we said FHA created in 1934. There's very few dates you have to know for your exam. One of them, maybe 1934. One you definitely have to know. And they show off, right? Yeah. 1968. What happened in 1968?
A lot of stuff. What have you?
The 13th Amendment of the anti-discriminatory.
Okay, well, the 13th Amendment didn't happen in 1968. That happened after
Well,
the
no,
Civil
but
War. But
right. But the anti-discriminatory act for housing.
Yeah, from the civil rights movement, what have you, came
right.
that.
So here's what I love that you did. You were just like, I don't know what you're talking about. I just know 1968. And that's perfect. Because you'll get it right in the exam. And you have to promise me, no matter what it says in your exam, I don't even care if it asks your birthday and you're born, whatever. If you see the words 1968, you circle 1968. Promise?
Yeah.
Yep. The answer will always be 1968. I don't care why sky's blue or you know, what year did man hit the moon. Just circle 1968. Whatever the question is, if you see 1968, circle it. Okay?
Okay.
Will do.
That's a big one. All right? In 1934 and 1968 are the same question, well then make me a bad review. But until that happens, go with it, cross your fingers and trust me. Okay? Now, if so, you do know what it is. 1968, which you guys were alluding to, was federal fair housing. Federal fair housing happened in 1968. There's a court case of Jones versus Mayer, which is based upon the 13th Amendment. The 13th Amendment was the one that abolished slavery. And this is what I go back to about you guys don't know vocabulary. You guys clearly know a lot of this stuff. But I feel like you're one of those people who've overstudied a little bit.
Oh, God.
And no, there's no problem with that. It's just, it's time to narrow down to those key information. So you've got all this great information. It's like, well, let's focus it down a little bit.
Right.
And you can do that with that vocabulary. So our housing 1968 was, you know, when they write it was a week after Martin Luther King was assassinated. It was April 7th. The federal fair housing was passed April 14th, 1 week after. It's not just for your exam. 1968 is a huge year in American history. It's one of those we kind of should know just for life. It's probably one of the more important years in our country's history. Okay. Right. 1934, FHA. Okay. Can I get an FHA insured loan and go buy an office building?
No.
No. So what can I get with an FHA loan? Residence. What's a residence?
Family home.
Yeah, like a single family dwelling. And yeah, like what you have here, whatever, 1 to 4 unit residential. I mean, that would be like a, you know, a quadplex or something along those lines.
Right.
Would it qualify for a FHA loan?
Yeah. 1 to 4 units. And that's what I was getting at. Like it all sounds when I say family. Basically, what we're talking about is 1 to 4 units. Okay. Now, when you guys go to FHA, there's limits on what you can get, right? Can you get a multi-million-dollar home with FHA loan? What's the limit?
I don't know the limit actually, but I mean, it isn't like an FHA loan kind of basically for, kind of unqualified buyers to some degree.
Some degree. So basically, when they ask about limits to FHA loan, ask for your region. You guys from North Carolina, and I put the link on the board here. So it says learn more about FHA loans. You go to FHA.com. You see this website down there?
Right.
And you go to North Carolina, it would look something like this here. Let me see if I can show you guys what it looks like really quick. What do you think? And it would look something like, you guys ready? Drum roll, please.
Yeah, ready.
It would look something like this. You guys see that?
Mm-hmm.
So if you go to the FHA website and type in North Carolina, you'll get to a page that looks something like this. And you see how it lists, and one thing you'll notice, you said it's 1 to 4 units, okay? And by the way, this is true for any state you go to. Okay, we're going to North Carolina, but then it lists your county as well. I don't know what county you guys are in, but it lists all of them. But you notice how it says single, duplex, triplex, and fourplex.
Right.
Why does it say that?
Because that's what it's up to. It's those
One
single to four.
Yeah, 1 to 4 units. Okay. Now the other interesting thing, and by the way, this is a screenshot off of the website, just so everybody knows. Okay? So this is nothing that you can't look up. It's not special to me. I literally took this screenshot while we're doing this right now. So this is nothing that you or I or anybody listening can't look up. What you see on the top bar of the image?
It's a private company. It's not a government agency and does not make loans.
It does not make loans.
Yeah, all right.
Okay? So once again, this stuff's relevant to what you're actually going to do, right?
Right.
Right, yeah.
Yeah. And other reason I showed you this is to take what you're learning and put it in very real terms. So hopefully you guys didn't mind that. Anyway. Moving right along, VA loans. What do you know about VA loans?
That they're for veterans or veteran houses too.
Well, here's what needs to qualify for it. Current member, a veteran, National Guard, or eligible surviving spouse. Okay, which is what you just referred to. Here's the big doozy that comes up with a VA loan. Can you get an FHA loan with no down payment?
Yes.
You need,
A low down payment.
yeah, you need a down payment for FHA loan.
Right, but you know.
Yeah, VA, no money down. That's a big one that comes up. Okay?
Okay. And there's no private mortgage insurance required.
Well, that's where the VA comes in. And the FHA didn't have private mortgage insurance either. That was at MIP.
Right, okay.
Okay? All right.
Make every day bloom with notes of Manoi blossoms and coconut milk that ignite your mood. True fragrance, crafted only by Blade S.C. Johnson.
Okay, you asked me quickly about statute of frauds. What is statute of frauds about?
The statute of fraud, I think, is kind of specific to North Carolina, but it's like
That's a national thing.
it's not.
Yeah.
Oh, it is, okay.
Everything we've gone over today, by the way, this is all federal stuff. FHA, VA, that's not specific to any states.
Okay, I guess I thought the statute of fraud had to do more with North Carolina because I thought it was talking about like the contract law kind of.
Still, the majority of the stuff that you learn applies to every state. People talk about state specific, but statute of frauds has to do with writing. Okay? Statute of limitations has to do with time. That doesn't change. The things that gets a little changing from thing to thing is what is that time? Or sometimes what needs to be in writing. That may change state to state. But the idea that statutory frauds has to do with writing, the pure definition of these things, that doesn't change. Does that make sense?
Yeah, I think that the reason I thought it was North Carolina specific is because the things that I have missed on our in-class assessments have all been things where I'm like, oh, well, in North Carolina, it's like this. And so I tend to be missing the contract law pieces, I think, that are from North Carolina specifically.
Right, and that may be true, but this isn't one of them.
Okay.
This is a very federal type thing.
Okay.
All right? I
Right.
mean, they'll ask you a lot of stuff that applies to every state, but it applies, but they'll put the word North Carolina in front of it.
Right.
Okay, you want to do some questions?
Sure.
Mm-hmm.
You nervous?
Yes.
Very.
Okay. You guys are a couple, right?
Yes.
Do you competitive with each other?
I am probably more so.
Definitely when it comes to this, yeah.
All right, get on. Here we go. First question. First, here's what we'll do. One of you read it out loud, and then we'll see if we can do this. Who wants to read this one out loud?
I'll go.
Okay.
Why would a lender be interested in making a government insured or government guaranteed loan over a traditional conventional loan? A, faster repayment, B, lower risk, C, easier qualification, D, faster foreclosure. D, it'll be a lower risk for the lender, correct?
Okay, Laura?
Yeah, that was a great thought.
Boom. Good. Okay, so we have a lot of these. We're going to go through those. So if you know them really well, I'm just going to keep going, okay?
Okay.
Perfect.
Okay, so low risk is the government's backing up. Okay, Laura, your turn.
Okay, the primary activities of SNMA in the secondary market involve A, FHA loans only, B, all types of real estate loans, C, government insured and guaranteed loans, or D, second mortgages and trust deeds pay up to $20,000. I say B.
C,
Okay.
that would be Fannie Mae.
Uh-oh,
Yeah.
Laura is winning.
Oh no.
Yeah, so Matthew, Laura, why did you say A, Matthew, why did you say C? What do you guys think? So what was your thinking? So you could get,
Well, I know that it was more than just FHA loans that they, because they also guarantee VA loans. And, so that was the only other one that made sense, honestly, C.
okay,
I should.
And it's not, all types of real estate loans because they don't do commercial or,
right.
only
So-
residential.
One of the things I liked you did is you were very careful about what I like to call absolutes. Absolutes are words like always, all, never. We prefer words like sometimes, usually, possibly, right?
Yeah.
Because there's always an exception. So one thing you did here is you're going through the question, you saw the word all, right? And you were like, I'm not comfortable with that.
Right.
I mean, there are things there's no exceptions, but typically, when you talk about law, there's an exception. That's why we have lawyers. They get paid a lot of money to essentially find the little exceptions in the rules. Okay, so you did a good job there. So Fannie Mae, the primary activity of Fannie Mae in the secondary market involves government insured and guaranteed loans. Okay,
Mm-hmm.
Laura, you all right?
Yeah, I'm good.
Okay. All right. Whose turn?
Okay. Fine. Under the statute of frauds, in order to be legally enforceable, all real estate contracts must be A, on a government-approved form, B, drafted by a lawyer, C, a unilateral agreement, or D, in writing.
I'm gonna go with B, drafted by a lawyer.
Yeah, I would say. What's that?
What do you think?
I would say B as well. I know that we can't draft it.
Right, that's the whole thing about statute of frauds.
It has for under a year.
Right,
Yeah,
that's the,
and I went with D. Yeah, I went with D just because I didn't think that, brokers were allowed to draft a contract like that, what have you. I know that you can make changes to it, but I thought they had to be drafted by a lawyer.
Well, let me ask you this. Is statute of frauds just about real estate?
No, yeah, you're right.
So you think of this is a much more general term. You're getting into specifics of how it functions within the world of real estate, of which you may or may not be right, but that becomes irrelevant. Because what they're talking about is a much more general thing here. Statute of frauds just must be in writing. That's all it means. And that applies to things way above and beyond just real estate. The specifics of how it functions in real estate is a different deal. And that's what I meant by things may differ from state to state within that realm of what needs to be in writing, how that works. But the word statute of frauds itself just means writing. Does that make sense?
Yeah.
And this is kind of what I was referring to, where you went, where I said you might have overstudied a little bit.
Yes.
Because, this was a perfect example, where you went into all these details to take you through all this great information you learned, where I said, hey, let's just back up and learn the vocabulary and know statute of frauds, write it. Boom. Done.
Yeah.
Okay. It's a tough one.
Which spelling requires a CRV? It is A.
Yeah, ABA.
Impressive, man. Good stuff, guys. Okay, certificate of reasonable value is issued by the Department of Veterans Affairs, setting forth the property's current market value based on the VA appraisal. Okay, that was great. Didn't think you guys get that right. You guys definitely didn't study it. Are you guys gonna spell real estate together and be one of those annoying teams with both your faces on the business card, smiling, looking at each other,
Yeah, with glamour shots? No.
Yeah, the glossy 80s glamour shot with the poofy hair and the guy with the mustache, and you guys were all happy together.
No, that's not the plan.
I am.
Yeah.
A bunch of cats and dogs around me.
Yeah, there you go. That's such an ego trip when people do that. As I say this, I have my face on every YouTube picture, on the internet, right? What a hypocrite I am. But
So you're a hero in our house.
the hero.
Yes.
Wow. That's about your house. You mean you two?
You are definitely in the left status here.
Thank you. I appreciate that. My mother would be proud.
Good.
Okay, so get the pictures when you guys pass, but just don't do the glossy thing and don't do the benchmark.
Okay.
Okay, next question. All right. I think you guys are gonna get this one. Can you read this one out loud though for people listening though?
Yep. Which of the following would not require a down payment? A, qualified veteran housing,
Okay.
an outlet, B, FHA, C, VA, or D, conventional?
Answer is B.
Yeah,
Okay.
C, a VA loan.
Next hint for your exam. If you've never heard of it, don't circle it. Okay?
Okay. Yeah.
All right. Why is that?
Because it's probably not the answer if you haven't heard of it.
Which is why, when we started this, I said, do vocabulary and not the questions for your exam. Excuse me, don't focus on practice questions. Because now you would have seen that, and it's not correct information, and now you've heard of it. You've heard of bad information.
Yeah.
Yeah,
Where you
right.
stick to vocabulary, the only thing you're learning is correct information.
Yeah, that's true.
So this kind of emphasizes that point of why I said, you know what, please just, in these precious hours before your exam, stick to the vocabulary.
Okay.
Yeah, very understandable.
Yeah, and hopefully that kind of explains that point a little bit, because you saw, I've never heard of it. Well, if you keep doing questions and going through every answer, you would have heard of it, and then it's a problem.
Right.
Okay.
Okay. All of the following are characteristics of VA loans except A, used for housing or farm property. B, lower interest rates than conventional loans. C, okay to use for the purchase of rental units. Or D, guaranteed by the VA. I feel like C.
Yeah, I think C as well. Because you only get one chance, but you only get one card.
Here,
What is that?
okay, expand upon what you were saying, you're making a great point there.
Yeah, you only get one kind of, you can only have one PA loan or what have you. I mean, you can defer it at some point in time and take it out again, but it's only one at a time, so why would you do that for rental units? You know, like,
Well, also, you're not allowed to get a rental unit. It has to be.
yeah,
So basically,
yeah,
the VA's purpose is to say, you served our country, we're very proud of you, and as a thank you, we're gonna make sure you can have a home. It is not there to make sure you can have a big business and start some multinational company. It's there to ensure that the people who served our country, when they come home, they can get a loan so they have a place to live. That's much easier than if you're an average citizen. So that's the thing, it's meant for them to have a home. Now, what is a home? 1 to 4 units.
Right.
Here, let's go this way.
Oh, sorry, was it my turn?
Yeah.
For FHA purposes, acquisition costs include non-recurring closing expenses, which of the following would not be included?
So where's the answer?
A discount point, B FHA appraisal fee, B credit report fee, or D impound for property taxes.
So this looks like a confusing question, right?
yeah,
Can I simplify this one for you? Because it's actually much easier than it looks.
yeah, please.
What does this word mean?
Non-recurring doesn't keep happening.
Yeah, one-time deal.
Does this keep happening? Or is this one time?
No, yeah, just one time.
Does this keep happening or is it one time?
One time,
Does this keep happening or is it one time?
one time,
One time.
What about this one?
Yeah, that keeps happening.
every year.
Okay.
So you see how kind of when you look at it, when I actually broke it down there like that, you're like, wow, that's actually a lot easier than it looks.
Yeah, no, I actually really appreciate that, especially because whenever there's a thing where it says like which one is not or except, like those questions trip me up. I have such a hard time so that I instantly look for something that is, and then I get stuck on that answer. So I like to be able to do that. So I'm glad that you pointed that out.
Yeah, so what I was trying to do there is look for the key words. A lot here about FHA, points, appraisal. Well, what about our basic grasp of the English language, right? Not recurring. Okay, well that's reoccurs, that reoccurs, that recurs. Oh, well, excuse me, that does not reoccur, this does not recur, this does not reoccur, this does. Very simple.
Right.
You know what, honestly, even if I went like this, you could probably get the answer. Because it's like one of those kids are doing their own thing. Which one's way different than the others? Actually, that's not fair. If I went like this, if I said, ready? And this is what I mean. If I look for the keywords when you do these questions. If that's all you saw, you'd see this. Then you say, okay, take out the not.
Yeah.
Right.
Which one of these is different?
Or I'd say, which one's reoccurring?
Right.
Okay, and that's how I want you to mentally see this question. So if we look at it again, and this is just test-taking techniques. If you can start to cross things out, like I just did, it'll be a lot better than you just trying to read the whole thing and go through it. So I said, okay, what word really sticks out to me here? This one does. Oh, but there's a not. And here's another word which is very scary that I'm going to throw out at you, okay? They love doing the exam. You ever heard the term double negative?
Yes.
Yeah.
What's a double negative? Negative, negative.
Yeah.
Double negatives cancel each other out.
Mm-hmm.
So when you take your exams, this is all you should see.
Yeah.
Right.
huge for me.
Right? And doesn't that make it a lot easier?
Yeah,
And
yeah.
I really like doing this question with you is when you guys first looked at it, there's this feeling like, ooh, wow, what's this all about? But when I broke it down, you're just like, okay, piece of cake, right?
Right.
Right? And there it is. Non-recurring is only paid one time. And there you got your property taxes. Cool. Okay.
Okay. Good, yeah. Okay. So,
All right. All of the following are considered advantages of FHA financing, except a low down payment, long-term loans with lower payments, easy to qualify for, buyer is protected with FHA insurance. All of the following are considered advantages of FHA financing, except.
I think it's B.
Okay, Matt, what do you think?
Yeah, B as well.
If the buyer isn't protected with the insurance.
Oh, yes.
The loan is protected.
That was a tricky one, right?
Oh, yeah.
And
Yeah, you kind of just,
FHA insurance, and you're like, yeah, FHA insured loans, that's right.
yeah,
right, and so what was tricky for you here, okay, is you guys know also, FHA insures lenders. That's totally right. It's protected by FHA insurance. FHA doesn't make loans, it insures loans. So obviously that one's fine, right? That's what we were thinking, correct?
Yeah.
yeah.
So what you
Keyword
did,
open.
you saw this, and you're like, that answer's great. FHA insurance, correct? What you missed,
Yep.
the sneaky part they sneaked in was here.
Yep.
Because the truth is, the buyer's not protected, who's protected?
Bank.
The lender.
Yeah,
Exactly.
the lender.
Yes, that's one of those sneaky ones, right?
Yes,
Sneaky.
very sneaky, I don't like it.
Yeah.
Okay, who would be responsible for paying the 1% origination fee on the FHA loan? A, escrow officer, B, the seller, C, the buyer, or D, the lender. I believe it's B, the seller pays the origination fee.
What do you think?
And see the buyer,
Buyer.
the buyer.
Yeah, the
Yeah.
seller has nothing to do with getting the loan. The seller's trying to sell their house. How do you pay for the house? They don't care.
Yeah, that's true.
I mean, I guess anything can be negotiated,
Yeah, but
but
the buyer is the one that's taking out the loan. They're the one that's going to have to
exactly.
help the origination fee. Yeah.
Right. And I say anything can be negotiated, going back to that thing of the rule about the absolutes, always, never. I guess you can negotiate, I'll get this, but you gotta pay my, origination fee, which I've never heard before, but anything's possible.
Hey, Joe, when you do the editing for this, can you edit it so I got all the questions right?
Yes, totally, that was my goal. Obviously, you didn't even have to
That would
ask.
be perfect. Thank you.
Right? I mean, come on, I'm even edited every time that he answered and a little wah wah. Lame.
Great. That's
Totally
excellent.
gonna fail. Yeah, and every time you answer, like, oh my God, she's so smart. I am truly a better human being. Her voice, Then when Matthew answered, I'm like, I just got dumber. Thanks, man. I just got dumber, right? Yeah,
Exactly.
you know, we edit all
That's
that.
what we're looking for now.
Totally. Yes. Matthew, our relationship's great.
Yeah.
There you go.
No.
There he is. Our answer again. C.
Okay, here we go. What do you guys have the answer to this one?
Okay, a purchaser of a home 5 years ago is now interested in securing an FHA loan. A salesperson would most likely introduce the homeowner to A, conventional bank or savings and loan, B, an appraiser, C, the FHA, or D, the Federal Home Loan Bank. I feel like it's the appraiser, like they have to, I don't know, 5 years ago?
8.
Good. Why'd you say A?
But if they're gonna get if they're looking to, obtain a loan, they've got to go through a conventional bank. I mean, granted, it might be an FHA insured loan, but they still have to go through a, accredited lender.
Perfect. So remember, I said, it says FHA loan, but what's really FHA insured loan? The pretty sure would do this. Do you go to the FHA?
No,
No.
you gotta go,
Yeah, what are you saying?
yeah, you gotta go through a lender of some sort, so.
There you go, Matthew. Sorry, Laura, you got that one right.
Yeah, I know.
He's doing great. Okay, here we go. Moving on.
Alright, the practice of charging discount points on FHA insured loans is because the lender desires to equalize the yield on FHA loans to the yield on conventional loans, create a competitive environment between FHA loans and conventional loans, close the gap between FHA loans and conventional loans on the secondary market, or D, all of the above. I think they're all the same answer, so I'm gonna go with D, right?
Let's see.
Okay, so that one's C. That one's a tougher one. Okay. It's all about their yield. They're trying to close the gap to make things a little better for the secondary market.
Yeah, okay. Actually, I could see that.
So I'm at the end of my question. It's actually timing's perfect because we've been doing this for an hour. So how do you feeling?
Pretty good. I mean, honestly, the advice on studying vocabulary is I've taken that to heart. Because we tend to get really in depth really quick, and we can get hung up on one question, for easy 15, 20 minutes discussing. But again, if you know the vocabulary, you can kind of rule out other answers and make if nothing, I don't know, lack of better term, an educated guess or something if you don't know it.
Right, that is true. So, and I think you guys are really well prepared. Now, is Sunday your state exam or is it your class exam?
Our class exam.
Oh, you guys are way over prepared. You guys are gonna do great. I don't know why you're nervous about that one. When do you take your state exam?
We have to, I guess once we pass the class exam, they'll give us information on how to go about taking the state exam.
What's so great that
All right, so we're gonna go ahead and stop it right there. They're just gonna talk about some additional stuff. But primarily, like I said, that some of the information that you need to be aware of as a real estate agent, you need to be aware of those different types. You need to know those questions because those are gonna be the type of questions that you're gonna end up dealing with on your daily practice. You also need to be able to know that information, not only for the testing, but also in regards to the content of basically the application in your day-to-day life, okay? Again, those are your three main areas. You do have conventional, you do end up having VA, and you do have FHA. Now, conventional, of course, is going to be your best loan because of the fact is that person has great credit, terms are going to be more favorable. But again, it's very hard to get qualified for. FHA, of course, most of the time for a down payment for an FHA, you're only looking at approximately 3.5% that you have to put down. So you are going to have to, in that situation, you do pay less, but you're going to have your PMI and MIP. Now, of course, all of them have some form of mortgage insurance, but you need to be aware of those differences. Again, a lot of information that was covered in that video. I know a lot of people, they get a lot of information from it, but it is very helpful. I like to use him a lot in my teaching at the community college because he provides a lot of helpful and useful information. What did y'all think about it? What did you think, Mr. Knowles? Pretty good, Miss Linda? Miss Leela, what did you think?
I thought it was helpful.
Helpful, good. Mr. Keith, what do you think, sir?
Yeah, I thought that was real helpful, especially the way he went through the questions and broke it down. That really helps out a lot.
Awesome. That's what I like to hear. I like to hear a majority of y'all saying that because that's the main purpose is we want y'all to get this content down. So in that situation, what we're going to go ahead and do is we're going to go ahead and call this a class this evening. We will pick back up on Monday. Yes, Ms. Nobles, you finally get a 2-day weekend where you can relax. So again, you get a 2-day weekend. So Stefan, you got a lot more to do. You got a lot of showings to do tomorrow. So you're going to be busy. But yes, we will continue. And again, if y'all have any questions, do not hesitate to email me or whatever. I'm always here for y'all. So we're halfway through. Remember, think about this. Halfway through the class, and if you've been with me on the previous classes, you're halfway through the program. So y'all keep moving along. Great news. We're getting there. We're moving along in the right direction. So been good. I've enjoyed everybody. I do have one thing I need to check. Perfect. That's great. All right. Yes, we're good. So we will call it a class tonight, and we will pick up on Monday. Y'all have a good evening.